A lot of people do not know what to do when it comes to buying stocks. They lose money because they don't know how to play the game. They don't know how to play the game. Stocks are risky. I just want to tell you that. There are people that will take your money. There will be people that will just fucking take your money, and they do not care who the fuck you are. They don't care how much money you have. If you have $150,000 and you invest it into a single company, those people will fucking take your money, bro. They don't give a fuck what happens after that. You can commit suicide. They will not give a shit about you. They want your money. People want your money, and they will take it. They know how to take it. They are manipulators of the stock market, and if you don't know how to play the game, they will take your money, and you will be left alone, fucking crying your heart out, because studies have shown losing money is like losing yourself. It's like losing a loved one. You know what I mean? So, I mean, back in 2008, you know what happened. People committed suicide. People lost their homes. People lost their 401k. People lost their pensions. They lost everything. Some people committed suicide, jumped off the buildings in New York. You know, and people died, bro, because they lost everything. You know, people will take your money. They do not care what happens to you once they take it. They will take it. All they want is money. You know what I'm saying? So I'm here to let you know stocks are risky if you do not know how to play the game. If you don't know how to play basketball, you're going to lose. Okay? If you don't know how to play. If you don't know how to play poker, you're going to lose your money. It's simple. If you know how to play, you're not going to lose. It's very simple, man. It's very simple. Right now is the best time to buy stocks. Why? Because we're in a correction. Every year, at the end of the year, there's a sell-off. What does that mean? It's exactly what it is, self-explanatory. A sell-off, meaning groups of investors and institutions sell off all their gains at the end of the year to collect their gains. They do it for tax purposes. They do it for gains. They are the manipulators of the stock. They do it every year. They sell in 1 year. Prices can go up like that. When October comes, boom, they sell off all they have. Well, they sell off more than 50% of what they have. And they bring the price down. Once they sell off all their shares, boom, prices go down. Bomb. You know, and this makes everybody be like, fuck, I lost money, so they sell. Prices go down even more. Then, those people that sold from the top, they buy back in at the bottom again. And when they're all buy back in, prices go back up because they're all buying back in at the same time. And then other people like you and me buy back in because we think the market's gonna go back up. And then boom, they sell again because they made another little gain. They made a gain in the whole year, boom, they sell off. Buy back in, then they made another little gain, boom, they sell off again, bring prices down again. That's what happens every year at the end of the year. They know how to manipulate stocks. They know how to take your money. Okay, so if you don't know what you're doing, be careful. I don't encourage you to buy stocks, but I am encouraging you to buy stocks. But you must know information. You must know a lot of information. If you do not know information, you will lose money, okay? Okay? I have a portfolio. I do not consider myself losing money, but I consider myself being down. I've lost, I don't want to say I've lost because I didn't lose anything, but I'm down 300 bucks on a $3,000 investment. I'm down 300 bucks, you know? I am down $300. I just not fear, I'm not scared of that at all, because if I had more money, I'd be down even way more money. You get what I'm saying? Now look at Bill Gates. Look at Jeff Bezos. You know how much he's down? He's down like $9 billion. He's still there. He's not complaining. He's living life. You know what I mean? There's a difference of being down and losing money. Okay? The difference is when you're down, you still have your money in stocks. When you've lost money, that means you sold all your shares. You're no longer a participant in the stock market. You get what I'm saying? So you got to know how to play the game. And there's people out there that are ferocious. They'll just take your money, bro. They don't give a fuck about you. And that's the beauty of the stock market. I'm not those guys. I don't do those shit, but I kind of do that shit. You get what I'm saying? I will take your money. If you selling it at a cheap price, I'm gonna buy because it's cheap. You know? If I bought in at $37 a share, if this stock is selling at $37, the price is at $37, and I bought in, and then prices drop to like 27 bucks, The guy who's selling it at $27, ooh, I'm gonna be buying that. I'm buying that. I'm buying that, bro. I'm taking that. Because you're selling at a loss, I'm taking it. It's gonna be a gain for me, but a loss for you. You have to remember, in the stock world, there's a winner and there's a loser. There's always a winner and there's always a loser. Okay, where there's a winner, there's a loser, always. There's no such thing as a winner, there's no such thing as a win-win. There can be a win-win, but there's no such thing as a win-win, okay? There's no, I don't even know why I said that, scratch that. There's no such thing as a win-win. There's a winner and a loser, okay? It's crazy, it's crazy. But you gotta know how to play the game. You gotta read a lot of information. Being in the stock world is knowing information, a lot of information. You must read. There's just a ton of books out there that teach you about the stock market, that teach you about the history of the stock market. I encourage you to read The Intelligent Investor, written by Benjamin Graham back in 1920 something. I think that's when it was written, 1929, or no, I'm sorry. In I don't know if it was the I don't know when it was written. I think the 60s or 1920s. I don't know when it was written. But it was written a long time ago, and it still applies till this day. You know. And there's another book that I like, written by Peter Lynch. It's called One Up on Wall Street. That book was written in 1989, I think. Excuse me. That book was written in 1989, and it still applies right now. It still applies today. You know, it blows my mind. It blows my mind. But read, man, read a lot of information, and then buy stocks. And then you'll see yourself making profit. I don't have profit right now because stocks are down. And because stocks are down, I'm buying even more because the price of ownership is very low. And I want to own as much shares as I can, so that way when prices go back up, I will not regret it because I bought in when it was low. I do not buy in when things go high. I don't buy in when things go high. When prices are high, I'm saving my money. I save, I'm a saver. My cash that I make, my income, I save it. You know, I buy only when prices drop. When everyone fears, when everyone's like, fuck, it's a bear market, blah, blah, blah. Let me give you a little insight to what a bear market is and a bull market. You know, when you go to New York and you see the bull and the Wall Street, and then you see the bear, bull market means when, okay, like, let's say this is right here, this right here is a graph, right? This line right here represents the prices, and this line right here represents the years. Let's say 1999, 2000, 2008, 2018, 2042. 1999, prices were low, and then it goes up and up and up and up and up and up. See how it's going up? That's a bull market. Bull market is when prices go up for an extended amount of years. It goes up, up, up. Bear market is when prices go down for an extended amount of years. But the moment when prices go down, it starts with a correction. When prices drop 10% from its highest peak, that's called a correction. Now when prices stay low, from when it's dropped, if it stays low for like an extended amount of time, like let's say 5 months, 6 months, 7 months, 3 years, 4 years, that's called a bear market, okay? And bear markets are the best because they do not last long. 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 Bear markets don't last long. The longest bear market, I think, lasted 33 months. It's almost 3 years. I think, don't quote me on that, but I think that was the longest bear market. I'm not sure. I have to see it again. But I see that number in my mind because I saw that number in the book. But I don't know if that's the largest. I don't know if that was the longest bear market. Maybe I'm missing a number that I didn't see. But that's a pretty that's almost 3 years. You know, 33 months for a bear market to happen. Imagine 3 years of losses. You know, that's gonna be. I wish that happened right now because that would be the best for me. Because why? Because I would have 3 years to buy as much as I can. You get what I'm saying? Bear markets don't last forever. So when a bear market occurs, use that to your advantage. Because bear markets do not last. Bull and bear is like the breath of the stock market. When you're breathing, you're getting as much air as you can. When you're breathing, when you're exhaling, you're losing all your air, so you have to breathe again. Taking in all the air, breathing, losing all your air. Inhaling, taking in all the profit. Losing all your air. inhaling, taking all the profit, losing. That's called volatility. That's the breath. That's the heartbeat of the stock market. Okay, so if you know how to play, you're gonna know how to win. If you don't know how to play, you're gonna freaking lose all your money. Just like I said before in the beginning, people are ferocious. They will take your money. They don't care who you are. They don't care how much money you've invested. They will take it all and leave you with nothing. So, if you don't know what to do, man, watch my videos, ask me questions, because I can't help you. You know, I can help you, and I can give you some. I can ground you, and I can guide you and to let you know what stocks you should buy if you want to buy something. You know, I can be your fund manager if that's what you want me to do. You know, because I manage my money and another person's money. I'm a manager of two monies, of two people's investments, me and someone else. And I have what's the word? Total confidence in investing. So I trust myself. I will not guarantee returns, but I will guarantee investing in businesses that are worth investing. I guarantee that I will invest in value and not in fucking crap. But I will not guarantee returns. Okay? So, if you want to invest with me, I don't mean if you want to invest with me, but if you want me to help you, I can help you and guide you along the way. Okay? That being said, I'm sorry to make this video 12 minutes long. I'm gonna head home and relax because it's a nice cool night. It's November 21st. It's a Wednesday, and tomorrow's Thanksgiving. I hope you guys have a good Thanksgiving, where I think we're gonna have a ham. And you guys take it easy, man. I love you guys to death, and don't be afraid. You know, if you want to buy stocks, let me know, man. I'll help you out, bro. I swear to God. 'Cause I'm helping myself out. I'm a guy who practices what he preaches. You know, I'm not a guy who just reads all this information and doesn't fucking do anything about it. I'm a guy who reads the information and is doing it for myself. And if I'm doing it for myself, that means I want to help you do it for yourself, so it can benefit you. Me helping you is not going to benefit me. It's going to benefit you because I'm helping myself. You get what I'm saying? So, anyways, I'm out of here, man. You guys take it easy. Peace.